Wall Street is sitting on a $3 trillion opportunity, and most of the retail is sitting out of it. What happens when traditional finance is no more sleeping on weekends and it's no more closing at 4 p.m. and when you can trade 24/7?
Billions of dollars of revenue are being generated on your assets essentially that just go into cash flow pockets of the bank. We unlock it and allow anyone, if you have a stock portfolio, you can use your stock portfolio as collateral on Edel and borrow however much you want without any credit checks, fully permissionless. Anyone in the world can do it.
Today I'm sitting with Andreas Soltermann, a trencher who's been in the crypto trenches for the past several years since 2013. He is a developer entrepreneur and someone that is now changing finance forever. He is building Edel Finance, which is the ultimate StockFi protocol, whereby you and I can tap into this $1 trillion opportunity, trade stocks like Tesla and Apple, earn yield out of it when it's sitting in our account, and most importantly, make the upside of what Wall Street has for us, but with the crypto rails. Andres, it's a pleasure to have you on the Base Show. Welcome.
Good morning. Thanks for having me. Exciting.
It's actually very, very early morning for you. Thanks for us have you on the show at 6 a.m. your time.
Of course, always. Yeah, it's funny. We spoke last week, right? Tried to make it work somehow. Okay, when can we fit it in? I have to fly to New York in 2 hours, so right after this one, I'll be heading straight to the airport.
You're a committed man, sir, and I respect that hustle. Andres, let me start off by saying this, because I've known you and I've seen you and I've heard about your journey thus far. And, you have been in the crypto space, or let's say in the industry since 2013. And that in a nutshell, let's say, we call it the OG. You have probably faced several brutal bear markets and you've had some massive wins as well. What actually ties you back into the market and now this journey with Edel Finance? Share a little bit more about your journey and what brings you back into this builder's mode.
Sure. I mean, I got in the space in 2013 by just playing around with mining, right? That's the only thing that you really could do back in the days. I really started investing hard in 2016, 17. That was like my first full journey. And I just never left. I just stuck around. I love the space. I feel like this is the only space where you can actually have so much impact, you can control so much of it, and I feel like what we're doing here is so important. We forget this sometimes, especially during all these crazy bull runs. For example, with meme coins, we had a couple years ago. You kind of forget that the technology is so important that it can enable so many people to participate in the financial industry, right? Yeah, so I just stuck around for even when markets were down, and around 1 year ago, when we saw that the first institutions start to move into this direction of tokenizing equities, right? It was clear to us that this is just going to become more, and we saw the perfect opportunity to launch a product that we now call Edel.
I respect that, sir, because, I think, to be honest, not many people survive that emotionally. Right. And but one other thing that you mentioned in your tweets, and something that, I would really like to understand, because you could have done it differently. But, you've talked a lot about crypto projects that raise and then die because they don't really build anything significant. But they manage to raise a lot of money from different VCs based on the hype and the narrative. I believe you guys actually did it very differently. Right. And you guys didn't raise money from VCs or massive rounds, but yet you are building something huge, which I believe you could have easily raised big amounts. What made you choose this path differently?
I mean, over the past, let's say, 3 years, starting in the last bear market, let's say in 2022, the meta for how projects have been launched were all kind of the same. You raise a bunch of money from VCs because back then money was quite easily accessible. Money was flowing in the ether quite more than it is now. So you raise a bunch of money, you launch the product, have a points program, do an airdrop, and then most projects just have one direction in the chart, right? Which I think is not the right thing. It leaves the community, those that that you rely on most, right? Your group, your tribe, your believers, most of the times it makes them be exit liquidity for VC funds that had the opportunity to invest in much earlier than you had, right? So you saw all these charts, all these mega overhyped launches of L1s, restaking protocols, stable coins, and so on, where everyone was painting billions of dollars of valuations that then in the end, just left everyone receiving way less than what they actually expected, right? But then last year we saw a little shift in meta, where projects did so-called fair launches. They launched a token quite early on, quite low valuation, right? And gave people the chance to buy in early, right? And that's what we did, right? Instead of giving a lot of people, a lot of VCs very, very favorable deals and checks, which then would just start selling and unlocking later, we decided to launch the full supply into the pool, launch at a very low market cap and go from there. And this actually, we got inspired to do this type of launch by a project called Kita, right? Also launching on Base.
Yep.
They really inspired us to do what we did. So we flipped the script a little bit.
Yeah, I will say this, that I totally missed out on that pre-sale, and because I know for a long time you guys, the charts were up only, and I've only heard very, very good things about you from the groups of people that I speak to.
Appreciate it.
Andreas, what would you say Edel Finance is to an average Joe that is exposed to stocks?
So if you think about it, when DeFi started, or DeFi really got kicked off by lending and DEXs, right? So back in the days when Aave was called ETHLend, that was the first real use case that was brought to us to play around in this field that we now call DeFi. So you could use your ETH, your Bitcoin as collateral, borrow stablecoins against it, or earn yield on these assets, right? We've been enjoying this for the past 7-8 years now, which is really, really battle tested. And we are now bringing the same tech, the same utility to stocks. This means that you are now able to earn yield on your stock. This yield normally, or this yield doesn't just come out of the air from nothing. This yield is already being earned by the brokers, the banks, institutions where you currently hold your stock anyways, right? We're just unlocking it and making everyone able to earn this yield that is generated anyways. And then secondly, we allow everyone in the world to take debt, to take a loan against their assets mega easily. So if you have a stock portfolio, let's say $100,000, you need to make a payment. You can use your stock portfolio as collateral on Edel and borrow $10,000, $20,000, $30,000, however much you want, right? Without any credit checks, fully permissionless. Anyone in the world can do it. You can repay your loan at any given moment you want. So it's just a better product than what's out there currently, right? We basically bring what us crypto DeFi nerds have been able to enjoy for the past 7 years. We now bring to people who are investing in stocks.
Mind blowing, man. So what you're saying basically is that if I have, let's say 10 shares of Apple sitting in my account, I can essentially come to Edel and borrow against that, essentially, right?
Yeah, exactly that. So you can borrow against it, you can use it as collateral, borrow dollars against, you can do all sorts of new financial strategies, right? Imagine over the past 100 years, the S&P 500 went up at an average of 10% per year, right? If you can borrow dollars against the S&P 500 at a lower interest rate than 10%, right? And you use that loan to buy more S&P 500, you have essentially a leveraged position of S&P 500, and you can turn a 10% yield into a 12%, 13%, 14%, 15% yield. These mechanics have been used by banks, asset managers, institutions, TradFi in general for the past 100 years. You have been locked out of them. And now, because of this tech that is now being created, the inclusion is insane. Anyone in the world with access to the internet can now have the same opportunities that all these institutions used to have, or where they used to have an edge on you.
Wow. So what you're saying basically is that for everyone that actually trades stocks and has stocks in their portfolio, essentially yield and this yield generation profit, let's call it that, right, is already being generated by our stock portfolio managers and traditional finance. It's just that now what you're doing is bringing that back into the hands of the users and allowing them to collateralize that for other means of finance.
Yeah, exactly. So if you think about it, it was for me, it was a very interesting learning curve as well. Like I became big with crypto. My first investment was Bitcoin. I wasn't old enough to buy stocks, right? The first experience I had with lending was Aave, right? I
Yep.
never went to a bank and took a loan, right? I never did that in my life. So learning how this stuff works was really eye-opening to me. But essentially, if you think about it, when a hedge fund or anyone wants to trade short, how this works, they have to borrow shares from somewhere and sell them, right? That's how a short sell works. In TradFi, it is illegal to sell or to short a stock without having owned it before, right? It's
Right.
illegal since
Yes.
2008. This is called a naked short. This is illegal in the US. So you have to borrow, or a hedge fund has to borrow the share and sell it then. It's not like on Hyperliquid, they pull the lever 10x, boom, and are short, right? It doesn't work like that in the real world. So hedge funds, if they want to hedge their positions, they need to borrow the share. Who do they borrow it from? And when they borrow it, they pay something for it, right? Nothing is free in this world. So whenever the hedge funds are borrowing shares, they pay interest on it, right? I've never received any interest on my shares before, right? And most of you have not either. Most of the people haven't even or don't know that
You
this
can
happens in the
even.
background.
Yes.
Yeah. So banks, brokers, mainly banks, brokers, and ETF issuers, so BlackRock, for example, they are huge lenders. They have a bunch of assets from other people, and a hedge fund doesn't go to you, to him, to them, and asks, hey, can I borrow your shares? They just go to the one who holds it, the bank, the institution, the ETF issuer, borrow it from them, pay them a yield, and in that way, billions of dollars of revenue are being generated on assets, on your assets essentially, that just go into cash flow pockets of the banks and the institutions, and we unlock it and allow anyone to participate in that by cutting out these middlemen.
Why does this need to be built on blockchain? Why not just a better traditional Web2 finance app?
Yeah, there are many, many, many reasons. So if you think about it, the way TradFi has been built is under the assumption that stocks are pieces of paper, right? This industry called securities lending started in the 70s when people used to actually pack physical shares into briefcases and run around Wall Street handing them out, right? A lending transaction, me borrowing shares from you and then repaying it, this took weeks, right, to process. And then basically they took very old technology and built on top of it, and on top of it, on top of it, and this became this huge, old, heavy ship, right? It's very hard to navigate, and that's where we are right now. Blockchain unlocks this by allowing one single point of truth, right? That's the important thing. You don't have that in TradFi. In TradFi, everyone keeps their own ledger, everyone has their own standards, right? Their own programming language. It's not interoperable, right? If you're using a blockchain, you have one single source of truth where everyone can reference to and say, okay, the share is there or the stock is here, right? And this allows more people to participate, right? Because right now there are certain limits, right? If you go to your bank and say, hey, I have one Tesla share, I want to lend it, right? Most of them are going to say, hey, we can't do it. It's just too small because the cost of doing this transaction is too big.
Right.
It outweighs the return, right? So you
Correct.
have to come with size, right? On chain, because there are no employees physically doing the trade or noting down, tracking where the share is, you can come with 1 cent worth of a share, right? That's why you see companies like Hyperliquid generating similar kinds of revenue than certain banks, but bringing in 1,000 times more profit because there are 10 people running the show, while a bank might need 10,000 employees to run their business, right? It's just a different scale.
Oh, yes. No, I absolutely agree there. And I think the use case that you're talking about here, especially when you have a single source of truth that's verifiable and tradable 24/7, and of course, what you said, which is the most valuable proposition here, is democratization of a single unit of share, which could be of any sort of value, right? Andreas, I will say this. One thing about you guys that is very commendable, you have built Avengers of a very stacked team, right? I'm talking about the likes of State Street, JP Morgan, BlackRock, and now you guys are validators of Canton and Franklin Templeton. And what's the vision here? Like, where does this head to, and how have you managed to build such a stacked team of believers?
Yeah, I mean, the proposition, the value proposition is very, very clear, right? We see lending being the biggest product in DeFi, right? In terms of TVL, in terms of revenue generation, it is a giant, right? Now we see a new asset class emerging. You had stable coins first, which are tokenized dollars. You had tokenized treasury bills, which came after. And now the logical next steps is bringing equities on chain, right? So for us, it was counting 1 + 1 together. A new asset class is going to come. These assets behave very different than what we've seen so far, right? Closing, trading on weekends, trading hours from 9 to 5, stock splits, dividends, right? These are all very new characteristics of tokens that we have not seen before. So all the existing lending infrastructure is not going to be fit for this new asset class. And it was clear that the product that we are building, which is lending infrastructure for stocks, is going to exist anyways. And if you have something at hand like this, it's very easy to onboard and convince great people to join your team, right? If you can say, hey, it's logical that this product, if we are not going to build it, someone else will, and someone else, if we are not mega successful with it, someone else is going to be, right? That made it very easy to build this team that we currently have.
The beauty of all of this is that you have Wall Street disrupting themselves on Edel Finance.
Yeah, I mean, kind of. I mean, we started. It's my co-founder James and I. James is coming from investment banking, so he has that TradFi background. I'm coming from DeFi debt development, right? And bring that side to the table. So it was us two initially. We built the team slowly around it, and then we were able to onboard some really amazing advisors from ex-BlackRock and all these names that you just mentioned.
That's amazing. No, congrats on that. I think very few teams in the space can actually attract heavyweight advisors because, one, I believe that a lot of us in the space have created a black mark of the industry, right?
Mm-hmm.
A lot of Wall Street people actually look at crypto as a scam. And I guess what you are building is a very clear proposition, and hence I would say they are already here riding the journey and believing in building it with you.
Yeah, I see what you mean. And I have two opinions on that. On the one hand, we have crypto's become a lot of burned soil, not just for institutions, mainly for retail. I mean, if you think about it, in 2024, 2025, we had crazy amounts of retail attention, especially around meme coins. Now, most people came into the space, lost money, and left again, right?
Yes.
On the other hand, institutions, for the first time ever, and you mentioned in the beginning, I've been around for a little while already now, but for the first time ever, I see that people are actually interested and really realize now that the technology that blockchain can be super valuable for banks and financial institutions, right? Like,
Yep.
You see crazy interest, and you see this especially, you mentioned Canton, right? This network where we just became a validator for. You see so much interest. Everyone is speaking about it. And the funny thing is, they don't even call it crypto. They call it digital assets, right? If you meet a financial institution that wants to work with this technology, they don't like to say blockchain, or they don't really like to say crypto, especially crypto. They don't really like to use that word. Everyone uses digital assets, right? On that side, you see so much interest. Like that's why we have this dual approach, because usually crypto startups, DeFi companies, or anything in crypto starts bottom up, which means that you start with retail and become so big that institutions can't ignore you, and then they start using you as well. We had this with Bitcoin, with Ethereum. Robinhood is the same, Coinbase is the same, right? It's all bottom up. However, I believe that now is the first time in history where a crypto company or a crypto an idea for a piece of technology that merges traditional finance with blockchain can also happen top down, right? Where the institutions integrated, and because institutions integrated, then retail also starts to use it, because there is so much interest right now around this whole space.
With the top-down approach that you're mentioning. And of course, one more thing, I think a key takeaway for a lot of builders who watch this eventually is, guys, the alpha is stop using crypto and start using digital assets. You might just be able to attract a lot more sophisticated investors.
Definitely. If you want institutions to invest in you, then we should use digital assets. Yeah, exactly.
The funny thing here, Andres, is that a lot of people used to say that RWA is the narrative when bear market comes along, right? And we have seen this in the past couple of bear markets, in the last cycle and the cycle before that. And everyone says, hey, you know what? Let them do it. Let them talk about building an RWA, because this is just a fad, and once the bull market comes back again, this dies around. I personally believe that the need and actually the value of integrating RWA, or let's say tokenization of digital assets now, hasn't been stronger than before, right? I think now is the right time, and the use cases that we're seeing, especially, if you look at like the top 5 narratives that are actually prevailing and maybe talked about and maybe will be around for the next 3-4 years, stablecoin, right? We're seeing privacy, we're seeing tokenization, RWA, digital assets. It's around all the stuff that we have once always thought about, saying that once the institutions will come in, and perhaps that will be our exit liquidity for us degens, right? But at the end of the day, it is the truth of how blockchain eventually adds that value for what it was built for. And like you said, not for the trading of meme coins. I mean, there's always that part of the casino that will never die, right? Because people will always trade, right? Everyone's looking for that lottery win. But at the end of the day, what you said makes a lot of sense and resonates, that people want to eventually see how we can merge this world of digital assets and Wall Street to then tap into the real value of what technologies of, like, let's say, blockchain is bringing forth.
You can compare it to internet companies. Like what's happening right now with types of products that are being built, it's so much more boring than what was being advertised it was going to be built in 2017, for example, or 2021, right? The same happened with internet companies. In the 2000s, when you had the .com bubble, you had people building chocolate.com and hundreds of millions of dollars of valuation, like complete bubble for nothing, right? People just claiming outrageous things that they're gonna do using the internet. You had the same with crypto, right? People saying, oh, we're gonna walk to earn and play to earn. We're all going into the metaverse, right? Like, you had all these crazy things happening, right? That were super exciting, and everyone was like, wow, I'm gonna invest here, buy some real estate in the metaverse, and buy this picture of a monkey for $100,000.
Buy
right?
my land next to Adidas in Sandbox.
Yeah, exactly. Like this stuff. And it's normal, right? We had exactly the same thing with internet companies, and we are currently seeing exactly the same thing again with AI, right? So crypto is maturing a lot, right? Obviously, you're always going to have these mini rallies where meme coins or NFTs or whatever else comes around next. We never know until it happens, right? Where a new thing comes around and new shiny object and everyone starts to go crazy on it. But RWAs are so boring for us normal crypto investors because you can't really make a lot of money with it, right? Like either you have these vaporware RWA projects that say we tokenize this farm in Colombia or we tokenize diamonds in Dubai. I don't know, like there is random things that you see all the time which I don't really believe in. They all go into the RWA category. But the real RWA, the real high impact RWA, first of all, a stablecoin is definitely an RWA, right? A tokenized treasury bill is an RWA. And now you have equities, right? You have equities, you will have bonds, and you have all sorts of financial instruments that people are going to bring on chain and allow people to make their money in crypto to tap into this opportunity. I mean, if you think about it, the crypto market cap is $2 trillion, right? These people maybe don't want to off-ramp back into the old system and buy regular stocks and bonds. They want to buy it on chain with their wallet, right? With their centralized exchange account. So you will see all these high impact products coming on chain, but most of the time there is no shiny object token attached to it that you can 100x on, right? So it matured, right? It matured, but the impact that this tech now has on actual users rather than just speculators and speculative investors is huge.
Is this what you were referring to in one of your tweets when you said once a user actually discovers earning yield on their stocks, they will never go back? And considering Wall Street closes at 4 p.m., is this what an average Edel Finance user's weekend looks like?
Yeah, I mean, definitely. Like when you understand that your portfolio is generating cash flow, right? Additional cash flow that could go to you, and could have came to you, right, over the past 10, 20 years. Considering the compound effect, it's actually crazy how much money was being extracted out of real retail investors back into the pockets of just a few, right? We estimated that around $250 billion of value has been extracted over the past 30 years from everyday stock investors, right? And we're enabling anyone and everyone to, take that money back and turn their assets into cash flow generating machines.
Andreas, I want to talk about the hard days of building, because not every day is a rosy one. Not every day you're able to go out there and attract these sophisticated investors. And back in the days in November 2025, when you guys just recently launched, there was some sort of massive FUD around the fact of team being able to snipe a massive supply. And of course, you guys dealt with it in a very transparent and sophisticated way to have community bring that faith back in you. How often do you wake up not hoping to deal with social trauma that you see, and yet not losing focus with what the business actually needs from a founder like yourself?
Definitely, yeah. I mean, on that side, it's crazy how fast mega enthusiasm and FOMO can switch into the exact opposite, right? When we launched, the market was down. We didn't know if this was a good time. Many people said, hey, maybe postpone, right? That's what most crypto founders do really well, postponing launches. And we actually decided against it. We were like, okay, let's launch anyways, and it went super well. And I told you in the beginning of this podcast that the main inspiration of the launch was Kita, right?
Yes.
And we actually did the launch exactly the same. So we supplied 100% of the supply into the liquidity pool. We bought in the first transaction 60% directly out of the pool, right, with the snipe. and we put these tokens into vesting contracts, and these tokens are still in investing contracts, right? So we even made a post like, hey, launch is complete. Here was the transaction where we sniped 60% of the supply. Now they're in the vesting contracts. Hooray, right? We launched. And then for some reason, some people, got, I don't know, like we had some rumors going on in the background of people wanting to hurt our image, right? Who wanted to, who actually paid for articles being written about the snipe, saying 30% was sniped, the team sniped the supply themselves, while in reality, we did that, and we actually communicated it openly and transparently. This was part of the launch, right? This was a feature, not. The more concerning thing, I would say, for projects that have tokens in general, is you're basically running two projects, or you're running two companies. You have the token and you have the actual business, right? And both require a lot of attention, right? So sometimes it's not the easiest thing. I think a lot of founders would resonate with that, to bring both under, or to be able to manage two things at the same time, right? You need to obviously focus on the project success, on the company, on the business, on the revenue generating models, on partnerships, etc. That can actually drive your business forward, while a lot of people, investors, want you to focus on short-term things that make the token go up. They want you to do centralized exchange listings, airdrops, giveaways, all these campaigns, right? Which oftentimes don't have anything to do with the real business. So it's tough, but I think we manage it quite well. The revenue or the business model is super clear. It's very clear how we're making money. It's super clear at what point we're making money. It's super clear at what point we're going to turn into a profitable business. The customers, the potential users are very, very clear. It's a very easy product, and I believe that easy products that actually make sense and you don't need a whole essay to explain what they do are the best. So I think we're going to be able to manage everything, bring everything under one hat quite well.
Respect for that. Respect for that. I think why I say respect for that is because I believe a lot of viewers here will agree. I mean, for sure, there'll be a lot of the naysayers, but if you've been in the crypto space long enough, you want to be able to know that the team knows what they're doing. And knowing what they're doing means also being able to know that I don't want to say control liquidity, control supply, but it is important for them to be able to understand how this works, right? Because exactly like what Andre said here is that, they were transparent about it. They actually have those tokens vested right now. And essentially they understand the business model to be able to give you guys an update of how this actually works. So again, I think it is something that requires massive respect to, one, execute very well, and of course, two, being able to communicate and have a very clear stance on what you guys believe and do, essentially.
Appreciate it. Yeah, and it's not always easy. But when you have good people around you, you can make it work.
Hey, I tell you this, man. I run a marketing agency and I speak to founders day in, day out. And I can tell you the fear of being a builder in crypto for decades is probably one of the, I'd say, traumatizing feeling, right? Because very often what happens is you're either coming in with a very clear goal to make some quick bucks, rug scam, or get in, get out kind of a scheme, or you're here for the long run and you understand that this is an industry where you're going to be able to face the music and yet the upside and the downside day in, day out. Right? Just the way you guys operate 24/7 and Wall Street ends at 4 p.m. For a crypto founder, there's no ending at switching off at 4 p.m. It's 24/7.
Yeah, 100%. And this is, you can't really switch off, right? Like you are. It's not like everyone who's running a business can understand that switching off is very hard. But if you have a business in crypto, where on the weekend something happens, something breaks all the time, like it's pretty crazy. So I feel like both you and me, we are facing the same kind of same kind of problems.
Andres, probably the right time to ask this. The motto for Edel is solve structurally and think for decades, right? Beautiful, right? Beautiful. I think that just shows the long-term mindset. And we have a lot of young entrepreneurs that are in the space or maybe outside of the space, have heard of the word crypto, have heard of the word digital assets. If you were to recommend or give one piece of advice to the Andres in 2013, who has perhaps seen all the trauma, the crashes, the rugs, and the dirty side of the industry, what would be that one piece of advice?
If it sounds too good to be true, it probably is.
Hey, that is a very straightforward and a valid advice, because to be honest, that's where we have our greed going all the way up, and that's when we crash down very hard, only to realize that it was us who didn't be able to catch that very too good to be true offer and then blame it on the industry.
Yeah, and I mean in crypto, it's very easy to buy something, right? It's very easy to click that buy button, and very hard to click that red sell button again, right? So I think that I would add that on top of it. Like, it's very easy to buy something, make a lot of money, but actually realizing it and taking the profits home, this is a different story, right?
Oh man, it hurts. I've personally been there many times. Andres, Mainnet is around the corner, and you guys just put up a tweet of some insane stats that you've generated on testnets. Tell us more about what the next milestones for the perhaps 6 to 12 months look like. What's keeping you excited and awake at night?
Yeah, super straightforward. I guess by the time that you're watching this, Mainnet is already live. So you can go to app.edel.finance. You can see the yields you're going to be able to earn, yield on stable coins and on your stocks, right? We're going to start with a couple initial equities. So it's the two indices. It's NASDAQ, S&P 500. Then you have Tesla, MicroStrategy, and NVIDIA. These three stocks that we accept as collateral. You can deposit them. You can earn yield on them. You can borrow stables against them. You can deploy stables, earn yield on it. And now, after having such a successful test, we had over 100,000 users. And the funny thing is, you had to actually pay to be able to use the testnet, right? So the dynamic was quite interesting, but still we got 100,000 people actively using it, right? Giving feedback, testing the application. So now we feel very confident about launching Mainnet. It's going to be an easy start, right? We are going to launch. We're going to attract the first million of TVL, 2, 3, 4, 5, 10, 20, right? And then we grow. So we want to take it step by step. We need to make sure that we grow while the demand grows, right? Tokenized equities is still a very early niche. Not so many people know that this exists, and a very small subgroup of people who are in crypto have already invested in it, right? So we need to grow slowly with the whole industry, drive awareness, and eventually our goal is to onboard people who are not crypto native, right? We're going to skip the buying Bitcoin and Ethereum and whatever part, and go directly from checkings account into Edel, buying tokenized equities, right? Because holding tokenized equities with us and using them as collateral to borrow dollars against it, or earning some passive yield on your stocks, this is real utility that people, everyday people who are not in the crypto trenches, who are just investing for their future in normal equities and bonds, we deliver a proper value for them, right? So this is the goal for this year. Have an initial start, right? Which is, while you're watching, probably already has happened. So feel free to check it out. And then just continuously grow, make the user experience better and better to be able to onboard these non-crypto trenching people.
Solve structurally, think in decades. If there's one thing I'm taking away from this conversation, is the fact that the traditional finance that we've known for years is changing, guys, and Edel Finance is spearheading this entire move, right? Andreas, thank you so much for pulling the curtains on Edel Finance and StockFi. I am super excited to see where you guys are leading with this whole journey, changing the way traditional finance has been done. And of course, guys, for more conversations like builders like Andres, don't forget to hit subscribe. I will be putting the links below. Check out edel.finance. I'll put the links to Andres' X account and the project's X account. But guys, I have enjoyed thoroughly learning more about what Andres is building with those heavy stack Avengers and what Edel Finance is yet to uncover. Until then, guys, Saib signing out. Cheers. Thank you, Andres, so much for coming on the show.
Thank you.